tabular statements. We're looking at the 2017 question. Now, the first thing you do is write down all the assets and liabilities in a tabular form like that. The one thing to look out for here is your debtors. In the question, it gives you net debtors of 86,400, which is debtors less provision of 4%. So to get the gross debtors, then you divide by 96 and multiply by 100, and that gives you 90,000. And the difference between 90,000 and the 86,400 is your provision for bad debt. Now, we're now going to start the question and look at all of the adjustments that go with it. The first thing we're going to look at then, if we turn over the page, we look at in January. Delaney decided to revalue land and buildings at the 1st of the 1st, 2016. The land element of the new value is at 110,000. The reason they give you the land element is that later on in the question, we have to do depreciation, and you don't depreciate land. So the first adjustment there now is, look at the old situations at the 1st of the 1st in January. Land and buildings were 630,000. The accumulated depreciation was 25,000. That gave you a net book value of 605,000. The new valuation was 800,000, and so therefore the accumulated depreciation is 0, so the net book value is 800,000. So the adjustment is land and buildings is to be increased by 170,000, accumulated depreciation is to be reduced by 25,000, giving you a net book value of 195,000, and would appear like this in your answer. So you can see there the land and buildings going up by 170, accumulated depreciation being brought back to 0, and of course your revaluation reserve. Now the second adjustment then was Delaney bought an adjoining premises. So let's have a look at that. He bought an adjoining premises on the 1st of the 1st for equipment. The buildings were 180,000, equipment 50,000, and debtors 12,000, and they owed 20,000 creditors, giving us a net worth of 222,000. He paid for it by the issuing of shares of 200,000 at a premium of 20 cents. So the 200,000 at €1 plus the share premium, which is the 200,000 at 20 cents, which is 40,000. So in effect, he paid 240,000 for an asset that was worth 222. Therefore, the goodwill is 18,000, and it would look like this in your answer. So you go back and you look at February, you have the land and buildings going up, the equipment going up, the debtors going up, and you're putting in goodwill now of 18,000. Share capital is increased by 200,000, the premium is 40,000, and of course your creditors 260. And then number 3. Number 3 then was in March, we want to increase the debtors to 6, provision for bad debt to 6%. So remember, we had debtors at the start of the year of 90,000, plus the 12,000 that we got in February. So that gave us 102,000. At 6% is 6,120. So there's my new provision for bad debt. If you go back to the start, you'll see the provision for bad debt in the balance sheet was 3,600. So therefore, to be accounted for is 2,520. So therefore, there's a charge to profit and loss account of an additional bad debt of 2,520. So you can see the P&L being charged 2,520, and the bad debt provision being increased by 2,520.